Invest Africa, proudly brought to you by KPMG.
China's been investing in Africa since the 1950s. But in the last decade, as both populations grow, the Chinese are looking to Africa for its natural resource wealth, while Africa seeks infrastructure investment.
China's extremely resource-intensive growth model has been very, very positive for African growth rates. The second sort of narrative to China-Africa's engagement has been the deployment of capital into Africa. Now this is Chinese sovereign wealth being deployed by two banks, China Development Bank and China Exim Bank. China, to such an extent that China is now the single largest lender to African governments, the single largest financier of infrastructure in Africa, recently displacing the World Bank. And that's been incredibly economically enabling, the very capex heavy fixed asset investment into the continent.
China buys more than a third of its oil from the African continent. According to Standard Chartered Bank, China-Africa trade volumes may reach $280 billion by 2015 because of increasing African investment opportunities. Experts warn that the resources for infrastructure model is not sustainable. There needs to be a shift to the resources for manufacturing model. In this potentially more rewarding partnership, Africa would supply resources to Chinese industries while making progress towards its own industrialization.
I'm afraid that many of our governments tend to overly focus on resources, where the real opportunity in Africa is industrialization. And the stars are aligned. We need to diversify our economy. And yet we're going through what is probably the single greatest force of deindustrialization ever in the global economy, that's starting now in Southeast China. But we still talk about resources and mining and extractive industries. I think the real question is which African economy will become almost the Vietnam of Africa. In other words, an economy that's absorbing this low-end manufacturing out of China. What Vietnam has done in Southeast Asia, and African economies should certainly be doing as well.
China is Africa's top business partner, with trade exceeding $166 billion. This, according to The Economist. The country is now set to extend over $12 billion in aid to Africa. What are the implications of China's investment into the continent? Well, joining me now in studio to discuss the implications of China's investment into Africa is Glenn Ho. He's a director at KPMG Advisory Services. Lynette Shen, she's the Chief Executive Officer at the NEPAD Business Foundation. And joining us in our Nairobi studios is Ken Kanayu. He's a Senior Investment Manager at Stanlib Kenya. Everyone, thank you so much for making the time to join us. Maybe, Glenn, let's start with you answering the question that seems to be always top of mind when we're talking China. What does China want out of Africa?
I think various things. Obviously, the one that always comes up is natural resources. But I think more and more China is seeing Africa as a new domestic market, or market for their domestic goods and consumer goods, and also seeing it as more and more a production base as well for their goods and services. We've seen the factory that's been built in Atlantis near Cape Town for television sets and household goods, washing machines, fridges, and that sort of thing. So I think it's more than just natural resources. It's a trading partner and a long-term relationship, like everyone else seeing Africa as the next big thing.
Lynette, does that sound as if we're seeing almost an evolution in the trade basket between Africa and China?
Yeah, definitely. I think over the last decade, trade relations have definitely increased 11-fold almost. The numbers are staggering. And I think that it is more than just the pure minerals. I think that there's a lot of private sector companies from China coming into Africa. And I think that whilst there are still deals being done on a government-to-government basis, there is more private sector interest coming in now.
Ken, let's bring the question over to East Africa and maybe see if there are any regional variances there. What is it that China seems to want out of the east of the continent?
No, I think I agree with the two previous speakers. I think China is very keen, obviously, on Africa. According to Standard Bank, China-Africa trade stood at $210 billion as at last year. And if you look at the import side, they imported goods worth $115 billion, and a lot of that was actually hard commodities and so on and so forth. If you look at the East African side, they are very keen on participating in what they call government deals. So government deals along the lines of telecoms, infrastructure, and so on and so forth.
Yeah.
We also have a lot of involvement in the private sector through Chinese state-owned enterprises. And for a lot of them, in terms of operating on the continent, they do see a lot of opportunity because obviously margins are being squeezed back home. So they do see quite a bit of opportunity. So I think in Kenya, if you look at sectors like infrastructure, telecoms, that seems to be the play that they're looking at, and not just in Kenya, but really within the wider East African region.
Well, Ken raises important issues around the domestic pressures that China is feeling right now. Maybe, Lynette, you can pick up on this, and let's talk about the kind of labor pressures that China is having and how that in turn makes Africa so attractive right now.
Well, certainly the population of China is huge. It's at least at 1.4 billion people at the moment. And so there's a lot of competition. There's also unemployment issues. And so when these projects are being implemented in Africa, there has been large criticism of China bringing their own laborers to implement the projects. I think that has caused in some quarters a lot of discontent, but I think that there is some advantages as well. The reality is that if Africa needs to implement these infrastructure projects at an accelerated rate, there's not necessarily the right level of capacity at the moment in Africa, and so certainly you need to bring a certain level of skills. However, I think that the negotiations between the governments and the conditions for investment in any African country has to be stipulated that whether it's a Chinese or US or Indian investor coming into Africa, that all investors have to train and build capacity at a local level. They have to employ local labor. They have to engage SMEs and procure from them and go into partnership with local companies.
Do you get a sense, though, Glenn, that some of these conditions that Lynette puts on the tables now are actually being negotiated and discussed between the governments as they tie down funds for these big infrastructure projects?
You've certainly seen some of the statements coming from the Chinese government to that effect, that and also warnings from the Chinese government to companies that are doing business in Africa to abide by local legislation and regulations. So you're seeing more and more of that. And while you talk on the labor issue, I think also you're seeing a lot of businesses in China moving their production facilities out of China into countries like Vietnam, etc.
Yeah.
So Africa is also a potential production base for them, and we've just seen recently with the geopolitical situation in the South China Sea that factories in Vietnam, perhaps that production capacity and facility should be moved to Africa.
And in fact, just to add to that, we recently led a trade mission to Ethiopia, and the Ethiopian government is making huge strides around capping wages for Ethiopian laborers, and they're trying to make Ethiopia the industrialization hub for Africa. So they're trying to attract manufacturing companies from all over the world where the labor costs will be lower or competing with China.
Ken, let's bring you into this labor conversation and in particular maybe get your sense about the regulatory environment that is enabling Africa and maybe even East Africa in particular to become the new factory for China. Is there a possibility of seeing Africa become China's Vietnam?
No, I think it is very possible. Obviously, if you look at the story of China, I think what's happening now is that they are beginning to realize that they face significant domestic demand, which they do need to address. So I think from a production perspective, there's a lot of focus now being turned towards the domestic market. And from an East African perspective, from the point of view of being able to develop that capability, both from a manufacturing perspective and also in terms of the labor costs that we do have, I think it would make a huge, I think it would be time for us to begin to have some impact. I think just based on the earlier point that was made before, we are seeing a lot of Chinese companies now beginning to abide by local regulation. They are now very happy to follow local governance processes when it comes to awarding of tenders, when it comes to actually complaining about the way tenders have been awarded and so on and so forth. So they're beginning to exert less political influence from the point of view of doing business and beginning now to follow more of the governance framework, because they do want to be seen as a credible investor. They do want to be seen as someone who has skin in the game and someone who's got some goodwill as well.
I mean, the Chinese are so well known for their productivity rates. Is that spilling over into Africa? Are we seeing the factories in Ethiopia and other parts of the continent picking up on that productivity rate that the Chinese are so well known for?
That's a tough question, but I think that Certainly, there's also been criticism on the way that the Chinese labourers are being handled, you know, working 24-hour shifts, etc. And I have to reiterate that this is, you know, maybe in the Western culture is perceived to be really bad in terms of labour laws, etc. But in China, that's the way people work. It's 24 hours a day, you work in shifts, so everyone gets their time to rest, and the focus is on getting the job done and getting it done quickly.
But I think that's also changing, Nasipa. You've seen the issues around Foxconn and those companies in China where there's been actually labour unrest because of the working conditions. So things are changing as well. So I think maybe we'll get to a happy norm where we can get to that work-life harmony.
A work-life harmony, Ken, that's what is being proposed here in Johannesburg as we try to get the productivity that the Chinese are well known for, whilst also trying to abide by, as what Lynette termed, the Western notions of labour regulations and the like. What exactly does Africa want from China, if not productivity?
I think if you look at obviously the African continent from an infrastructure perspective, I think the World Bank estimates that we need to spend close to $100 billion annually just to sort out our needs. I think at the moment we are spending only half that amount. So many African countries are looking for a partner to be able to partner with to execute and develop on many infrastructure projects. So whether it's a partner from the point of view of executing on PPP sort of frameworks, whether it's a partner from the point of view of providing fiscal stimulus to allow African debt to be utilized towards infrastructure, I think those are the sorts of things that Africa is actually looking for, as opposed to the scenario that we were discussing earlier, where obviously we have a lot of Chinese aid coming into African countries, Chinese money coming to develop African infrastructure, and no capacity building being done on the ground, either from the point of view of labor or from the point of view of engineering expertise.
Ken, I want to pose the question maybe back to you and maybe help us understand a little bit deeper. Why has China gotten off so quickly off the mark when it comes to investing in Africa's infrastructure? Surely the same questions of risk, the same questions of bankability that other developed nations have, China also is faced with those, and yet they are so far into investing in the continent on that front. Why?
I think it's you know at the moment China has invested a lot into Africa. I mean, if the information office for the Chinese State Council estimates that Chinese FDI between 2009 and 2012 has more than doubled, from $9 billion to $21 billion. There are more than 2,000 Chinese enterprises operating in 50 African countries in Africa. So it's really in their interest to make sure that from the point of view of infrastructure, and not just hardcore infrastructure, but infrastructure from the point of view of financial services, infrastructure from the point of view of capacity building, that is actually being done to enable lower the risk of actually engaging on the Chinese, on the African continent. So in my own view, they already have a lot invested in, so obviously they need to protect their investment, and they do realize that for them to be seen as a long-term credible partner, they also need to be seen to be contributing towards the African continent sort of development.
Let me put the
I think the one the one thing that I have identified that makes a big impact is infrastructure. Yeah.
Right. I wanted to put the question in a different way. Maybe, Glenn, you'll pick up on this. Do the Chinese have a higher appetite for risk than other funders?
I think initially they have, but more and more we're seeing more of the Chinese companies doing due diligences beforehand and doing post-project implementation reviews to ensure that all the goals have actually been reached. I think whereas in the past might have been a bit more laissez-faire, but I think they've also been earlier on the game, and I think it also probably relates to the political history between the continent and China. I think it was the African continent that brought China back into the United Nations.
Yeah.
And for that, I think there's always been a lot of gratefulness to Africa for that, because the Tanzam Railway that was built in the 1970s was at a time when China was one of the poorest countries in the world. So I think it goes quite deep, that relationship.
Really deep relations? Is this what we're seeing, almost a payoff from the political relationships? Is that something that resonates with you, Lynette?
Well, certainly I think that from a political viewpoint, there is the Chinese policies a sort of a no interference with domestic issues and with no strings attached. And I think that's why they have maybe perceived high appetite for risk. They were not encumbered by all these conditionalities of human rights, etc., etc. And so they really have plunged into the continent. I think that they have also learnt over the last decade. I know certainly that I've been interviewed by the Chinese government on perceptions of China doing business in Africa. And I think that to a large degree that when I questioned them on some of these things, they said, well, we were never asked or we were never told that this was the expectations. So I think that they're aware of that now, and as Glenn said, they're trying to comply with local legislations and requirements.
So lots more to talk about around brand China and what that brand is doing on the continent. But for now, we're going to take a short break. But when we come back, we're going to delve into that issue and many more as we look at China-Africa relations. We'll see you in 2 minutes. Welcome back to Invest Africa. Remember that we do value your suggestions and your feedback, so please send us an email. That's to investafrica@abn360.com, or talk to us on Twitter, following me at Nozi Pumbanjwa or the show at CNBC Africa. The hashtag is Invest Africa. Still with me, my guests, Glenn Ho, Director at KPMG Advisory Services, Lynette Shen, Chief Executive Officer at the Neped Business Foundation, and Ken Kanio, he's a Chief Investment Officer at Stanlib, and he joins us from our studios in Nairobi. Let me start off with a question back here in Johannesburg, and perhaps to you, Glenn. As trade between Africa and China increases, what trend are we seeing with aid?
I think the definition of aid is something that should be looked at. I think the way China looks at aid and how people define aid are in different ways. So aid from China is definitely a legacy from the Cold War. So they would give aid to countries because of recognition of the People's Republic of China versus Taiwan. So that's the sort of aid they would give, and they regard that as aid. But there are also loan concessions, etc., which is also regarded by some other people as aid, but it's not actually aid as part of a trade deal.
Is that still is that a trend that is cognizant, these geopolitical considerations, Lynette, maybe being more important than other domestic factors in the country which they're granting aid to?
Yeah, absolutely. The way that the Chinese have engaged is at a national government level, and going to the countries and asking what they need, basically in terms of infrastructure, investment opportunities, and also in terms of other areas like hospitals and schools. And they've basically provided that in terms of part of the deal, or sometimes they have just done that. But as Glenn said, they don't traditionally call it aid. So there is no Chinese aid agency that's established. I know that there's been discussions or recommendations that they set up one, but I don't think that that's the Chinese way of doing business. And in fact, if you look at FOCAC, the FOCAC meetings happen every 3 years, and in fact in 2015 it will be hosted here in Johannesburg. There have been concessions made through those agreements and discussions with the African governments around debt relief, looking at exchange programs, training up of nurses, etc. So that's how the aid has been implemented, is through the FOCAC agreements.
Ken, let's bring in another element of this conversation. In particular, we've seen in the past the need for African governments, and particularly in South Africa, saying or giving out rhetoric that they need to protect South Africa from Chinese dumping. And in particular, we saw the textile industry being protected against Chinese dumping. How evident is this trend in other parts of Africa, and how does this then fit in to the broader relationship?
Yeah, I think for many Chinese companies, they're aware of the perception that they do carry, or the brand that they do carry into Africa. There are a lot of private entrepreneurs, both Chinese and non-Chinese, who've made a lot of money through bringing in sort of Chinese substandard or inferior goods into Africa and selling them off, which would be products which would not meet a global standard. And I think many Chinese companies have been very wary of this. And if you do look, for example, at the telecom sector, for example, I think that's one sector in Africa where the Chinese have made a concerted effort to ensure that the product that they do deliver in country meets global sort of quality standards. If you look at companies like Huawei, who are supplying now high-end telecoms equipment like servers, base stations, and so on and so forth, they've made sure that they've made the standard. And for many African countries now, when they weigh up the cost of this equipment against global names like Siemens and Alcatel, and they weigh up the cost versus the utility, you actually do see that now a lot of Chinese companies are able to actually sit down at the table and have a serious discussion. So I think they are aware of this, and they are taking steps to actually do this, I think, from an institutional perspective.
Yeah.
But from the point of view of the private sector and the level below that, you still do see a lot of inferior Chinese goods do come through, which makes it very difficult for the guys to shake off that perception.
But surely this is also against the backdrop of changing consumer trends from the African consumer that we're seeing rise, and the kind of goods and services that they're demanding. Maybe, Glenn, let's talk about what Chinese companies are doing differently that's differentiating them and allowing them to capture the pockets of the African consumer.
I think, as Ken quite rightly said, on the telecommunications side has been very positive. And I think because they're also from a developing country, they're able to produce products that are for the developing market. So, for example, Huawei and companies like that will bring you a smartphone that's affordable for the normal person in a developing market. So I think they've tried to look at it from that perspective as well.
Differentiations for the African consumer, Lynette?
I think that the Chinese entrepreneurs that have come in here have really immersed themselves into their markets by setting up even spaza shops in the townships and other areas, and so they've not been scared to venture into those markets. The goods are very reasonably priced, and understanding the economic situations of the majority of the population, their prices are low. Yes, maybe the quality is not exactly the same, but they're looking at what are the majority of consumers need at what pricing.
Right. Let's move away from consumers and maybe look at agriculture. And I want to come to you, Ken, with this question. There's been quite significant criticism as well that the opportunities for agriculture in Africa do exist, and perhaps these are slightly veiled as a harsher form of land grabbing that is happening on the continent. Is that a reflection that we're seeing in the east of the continent?
What happens especially in many parts of Africa is that agriculture tends to be non-institutionalized, it tends to be not very mechanized, and it tends to be done on a very small sort of scale. So it does affect things like yields, productivity, variety, seed quality, and so on and so forth. Obviously for the Chinese, the guys are interested obviously in feeding their own population. I think I saw a study that was done some time back by I think one of the leading universities that stated that I think it's by 2050, something like that, China will be consuming 75% of the world's beef. Now, this cattle obviously needs grain, so where is this grain going to come from? So for them, when they do their forecast up front, they look at global grain production. You're obviously well aware that they consume a significant minority of the world's grain. These are some of the things that they are forward planning and trying to future-proof. Obviously their plans going forward. For many African countries, the absence of institutional agriculture, large-scale sort of mechanized agriculture is simply being seen as an opportunity for the Chinese to be able to grab onto that and benefit from that opportunity in their own right.
Yeah.
You have not actually seen commercial Chinese farmers coming into Africa producing grain for Africa's own consumption. It's more or less for China's sort of own consumption, which is why you've seen a lot of sort of a lot of negative sentiment come through as a result of that.
What kind of policies should we be thinking about from the African perspective to make sure that we're actually benefiting from this appetite for agriculture, but also making sure that we're not losing out?
Well, just on that, it's not only the Chinese. There's a lot of Arab and other country investors doing exactly the same thing, basically buying up huge tracts of land, farming and exporting the raw produce. So I think that under the NEPAD framework, there is the CADAP initiative, the Comprehensive African Agriculture Development Program, and the national governments have signed, I think about 40 countries now have signed that compact, and it really looks at a strategy on how do we grow the agriculture sector and what is needed. And the whole premise is based upon attracting investors, many agribusinesses or other manufacturing or production, and then trying to add value to those products and then integrating smallholder farmers into this value chain. About 60 to 70% of all farming in Africa is done by smallholder farmers. And if we want to make them commercially viable, that's the way to integrate them into the larger businesses. So it has to, again, through those CADAP compacts, it does set guidelines on how the agriculture sector needs to be grown. And again, similarly, there should be investment criteria for any investors that come in.
Are we thinking about it the right way, Glenn?
I think so. I think the small-scale farmers is what's happening in Africa, and I think to a large degree that's how the Chinese economy was grown out of the small-scale farmers who were allowed to then sell off the surplus to create profits. But I think in the longer term, probably larger-scale farming projects. So I think we look at the NDP and development plans for Africa as a whole. I think we need to look at bigger, longer-term, 20, 30 years. Where do we go from the small-scale farmers into the bigger farming corporations for efficiencies going forward? Because I think even the current Chinese farming sector is probably not as effective and efficient as it could be.
Let's get a final comment from Nairobi. Ken, just your overall sentiment in terms of the prospects for Africa-China relations, in particular looking at that evolution of the relationship.
I think there's definitely a lot of potential. As I mentioned earlier, Chinese-Africa trade has been growing in leaps and bounds every single year. And the benefit, and the good thing about it is that it's not just one-way traffic. I also have to mention as well that, that exports as well into China have been picking up also. I do feel that now a more stable platform based on mutual leverage and mutual respect is coming up. I think the Chinese are fully aware that there are other partners who are courting Africa as well. I think Japan is very keen to re-establish its influence on the continent. If you look globally at the West as well, they're also very keen and monitoring the situation on the ground to make sure that they're not far left behind. So I think from the point of view of geopolitics, I think from the point of view of influence, I think China now is aware that it needs to do things right to be able to position itself as a preferred partner, because there are people who are waiting on the wings to assume that role as well.
As people continue to wait on the wings, we're going to wrap up this conversation, and this brings us to the end of this week's episode of Invest Africa. Thank you again to all my guests. Bruce Whitfield is up next as he unpacks the latest news from South Africa's economy on Tonight with Bruce. Until next time, it's goodbye, and thank you so much for joining us.